Welcome back, everyone. So today I'm going to touch on something that's a bit more urgent. This video is pertaining to Ethereum, which we refer to in crypto as ETH. Now, in the previous videos, I explained Bitcoin and how it came about, how it is the king, how it is the first, how it is the biggest, and also I explained the first, not the first, but the main altcoin. And I explained that every coin outside of Bitcoin is an altcoin. So the main, the king, the biggest altcoin is Ethereum. And Ethereum is known as the money of the internet. As the money of the internet. So I'm going to play a clip in where Raoul Pal, which this is the guy I want to introduce to you guys, because as the time go on, I want to start introducing certain influencers, certain educators, certain Web3 or crypto main figures, so that perhaps you guys can go to their channels or go to their websites and kind of benefit and start taking alpha, start taking beneficial information that might help y'all in life and help y'all on your financial journey. So they asked Raoul Pal about Bitcoin versus Ethereum, basically, in a nutshell. Mind you, this guy, Raoul Pal, he is one of the ex-executives of Goldman Sachs, which is one of the biggest investment companies on Wall Street. One of the biggest investment companies on Wall Street. So they pose a question to him, and they're asking about Bitcoin versus ETH. Because he used to be a Bitcoin maximist, meaning he was a person who was indulged deep into Bitcoin, which you have a lot of these guys who are billionaires from Bitcoin specific. So they asked him a question about ETH versus Bitcoin investment-wise, and then he goes in to explain certain things. So I'm going to play this clipping. I want you guys to take heed. Try to take in what he's going to say, and then I'm going to touch back on it to put it in a bit more simple or a bit more of a simple term so that you guys can understand some of this alpha, some of this knowledge that he gives, which is very, very, very important. One thing that I'm going to start stressing is generational wealth. Remember these words, generational wealth. We are shifting now. From now, we are starting a generational wealth shift, which a lot of the economists and the financial professionals or financial, I don't know what you would call them, the people who deal with finance, they have been explaining that the biggest financial shift is starting now. So listen to this clipping, and then I'll be right back, and I'm explaining and touch on some of this stuff.
Not because I don't like Bitcoin or don't think it goes up. I just think it goes up less.
Yeah.
We're looking at this as a technology and a network adoption model. So you want to back the network that's growing the fastest and has the most number of applications.
Yeah.
That's the safest, easiest allocation. That happens to be ETH. Now, other earlier stage tokens, whether it's Solana or AVAX or whatever, are getting earlier on the adoption curve. So you get that accelerated phase. So they'll probably outperform. But if you're just thinking the safe, easy bet, we're now looking at the internet. The money of the internet is ETH currently. Nothing is exchanged in
That's
Bitcoin.
right.
The money of the internet is ETH. DeFi is built on ETH. NFTs are built on ETH. All of this is being built on ETH. ETH now has a yield.
Yep.
Stable coins are on ETH. And ETH has a yield. What's left? Yes, it's not fast enough. So people go to other chains for that. It's a bit more expensive. People go to other chains. But the broad encompassing of the space, this is the simple, easiest bet to take. I believe in this Web3 technology world. So where do you allocate? Bitcoin or ETH? It's going to be ETH. Why? Because you're going to get something between a 6 and a 10% yield. That's extraordinary. Yep. And you've got this deflationary issue of burning the tokens based on network activity. So that's another massive supply shock. So there's less ETH around every year. It's getting locked up, and you've got no miners. Put against this massive demand shock, and we've got the macro cycle turning. I look at this and think, holy shit, this is a massively imbalanced supply and demand situation.
So, as you guys have heard, Raoul Paul have really dropped some serious alpha. And he's dealing with network adoption, Web3. Now, we're talking about the masses coming into crypto because as of now, it's only a small amount of people who actually is indulging in crypto. So, ETH, as he referred to as the internet money. Internet money meaning if you was dealing with Web3, NFTs, blockchain, if you was on a DEX or a swap, you have to use, or one of the main currencies to use is ETH. Now, you guys probably start off with like Coinbase, which is a centralized exchange, or KuCoin, or Binance. I'm gonna say the two biggest from the centralized, right, is Coinbase and Binance. However, you have more decentralized exchanges like Uniswap, PancakeSwap, QuickSwap. These are when you don't have any middle person. You are buying the coins directly and you're holding the coins directly in your wallet, your own crypto wallet. However, nevertheless, not to get off the case, ETH is the crypto money. ETH is the internet money. The money that is used internet-wise, Web3. There's no currency used more than ETH when we're talking about transactions on the blockchain and Web3. Whether it's DeFi, which we will bring a video to explain what DeFi is. It's decentralized finance. So just to make a long story short, of make it more basic and simple, it is basically it's applications that are decentralized on a blockchain that gives or provides the services that the banks might provide. For instance, if a person wanted to take out a loan for a mortgage or buy a car or open up an insurance policy, DeFi brings and provides all of this on a blockchain from basically applications. Remember, it is decentralized, meaning you don't have to go through the bank. Everything is already have a platform and it's contracts. It is contracts. So DeFi is ran on top of ETH. And then we have NFTs, which I'm quite sure most of us are well aware of NFTs, like CryptoPunks, like Bored Ape Yacht Club, which we've seen a lot of the celebrities and the movie stars and the big, the more upper class rich athletes, they all have these pictures of these apes, which is known as the Bored Ape Yacht Clubs. Also stable coins and crypto. On the blockchain, we have a thing called stable coins. So the stable coins is like USDT, USDC. These stable coins don't go up or they don't go down. They more so used as a store, more of a store value, meaning you can take your money out of ETH, and if you didn't want to take it off the blockchain completely, then you can just put it in a stable coin because it's not going to go up or it's not going to go down. One thing about crypto at this point is that it's volatile. It goes up and down, up and down. However, stable coins was created so that if an individual wanted to pull their money out of a coin, they can put their money into a more safer, stable coin. Like we said, USDT, USDC. Also, ETH, from the benefits of ETH is that it yields 6 to 10% profit. And then this is also going into the merge, which ETH is going from, or Ethereum is going from proof of work to stake. And what does that mean? Now, at this point, people mine ETH, meaning they have computers that solve these complicated equations and problems, and they're rewarded with ETH. This is called mining ETH. So, in regards to the market, in regards to the crypto market, when we have miners mining ETH, hundreds and thousands of ETH each day, then they put this ETH on a market. However, when the merge, meaning ETH 2.0 comes about in September, then the mining is going to be done. So we're going to have a thing called scarce, right? We're going to have a thing called a supply shock. Whereas though all of the ETH that was being created and mined is no longer going to be mined anymore. So we're going to have a supply shock. And these are some of the things that's taking place and that is going on from the benefits of ETH. Also, we have the burn mechanism, meaning as much as the network is active, it is actively burning coins, constant, which does what? It also dictates and it deals with the supply shock. And also we have the institutional money. So one reason, as the economists and the financial people, gurus as they would say, one thing that they say about Bitcoin is that the big money, the real big money, the institutional money, they haven't really invested in Bitcoin at this point because it doesn't yield anything. What do we mean by yield? Meaning a person don't get any interest off the money they're earning. However, it's a great store value, meaning Bitcoin, because if you put your money in Bitcoin 4 years ago, you'll be rich. However, ETH, you will be rich also if you put money 4 years ago into ETH. However, ETH have a thing called staking. So staking is when an individual could put, let's say, 5,000, 10,000, and it's locked up with ETH, and then you get 6 or 4 to 10%, something like this, that they're going to figure out. They will give the exact numbers that they will give to the individuals who lock their money up in ETH. So now we have the big money, the trillions, the hedge firms and like this that want to indulge in crypto. This makes it very interesting. So we're talking about the stock market right now, and it is about a $60 trillion market. However, crypto is a $1 trillion market. When we're talking about big hedge funds and big institutions and big financial corporations pouring money into crypto, we're talking about the whole market doing a 10 to 20 to 30x. And if we are invested right now, then our money would go up tremendously. Our money will go up tremendously. One thing that we also have to understand is that in crypto, we want to be the first to the party. We want to be from those individuals who buy into a coin, who buy into a concept or idea in the beginning, when it's really cheap. And then when everybody come in and start buying and the property goes up, like in simple terms, you might have bought something more than a piece of property in the inner city. You might have bought it for, let's say, 20, 30,000. And then you have this gentrification. When all the big money start coming in and start buying, then that's when you want to sell. You bought a house for 50, 60,000. Now it's worth 320. It's the same concept with assets, with crypto, with stocks. We want to be from the first people who bought in. Let's say we bought something at $1 or $2 or $3. We want to be down at the bottom. So when it shoot up to $100 or $110 or $90, then we can sell our money. So really, one thing that I really want to put emphasis on is we want to build our bags up right now. We want to build our bags up right now. And when the big institutional trillions and trillions come in, we sell them our bags. And where that's going to put us at, that's going to put us where we have wealth, where we have life-changing money. And this is what we're seeking. So I would like you guys, to, if this information was beneficial, to like and subscribe so this algorithm can get this information out to others, so that others can benefit. Also share and try to put this information out as much as we can. ETH, Leaf out. I'll see y'all in the next video.